All right, we are back on this Friday afternoon with a trade recap as well as going over some levels to watch out for the weekend, potentially Sunday and even until Monday. So for the yesterday, let's go over yesterday because we made a very nice pivot on the chart yesterday after the dump and obviously had a very nice rally back up to the upside. So we had this range low to this range high, and we did come back to the 0.5 or the midpoint of the range, and we did find support there, and we made a nice break of structure coming out of that zone, and we just continued higher and higher. So today, coming into this morning, we were watching this order block, the very extreme premium section of this range. We did almost hit that order block. So coming into that, we barely missed it just by a hair. And when that happens, we can now say that this order block has inducement on it. So it has a chance not only to hit this institutional order block, which is a nice level of resistance, but it also has the chance to take out the previous rise up. Everyone that shorted here will get stopped out from this high taken this previous high. So this was early pre-market and we made a low, did not break that high, but closed below this previous high for a swing failure pattern. And if we come down to the 2-minute, since we now have the alert that went off that we went inside this order block, we were then looking for a way to get into the trade. But we wanted to have a way to get into the trade that was a refined entry and not just shorting a very strong uprising candle, because that oftentimes is just going to lead you to get stopped out or entering a trade too early. So once we broke structure here, we had a very fractal break from here to here, but then we had a 2-minute break from here to here, and we immediately came back and retested this order block that left, and this was an order block that did something. What did it do? It broke structure. So this was the order block left behind that broke your structure, came back to retest that order block. So then we actually enter in around that order block with the stop loss above that order block for a 7.15 hour trade just down to VWAP. If you happen to take it a little bit further beyond VWAP, it would have been about a 9.25 hour trade all the way down to the tip top. But a realistic take profit would have been VWAP. So that's why I had this at a 7R trade. So now that we've gone over that, we can look at coming into, this was also the New York Open. So as New York was opening, everyone thought that, oh, we're going long, right? We're going long. But everyone longed right into this POI, or this point of interest, which was the institutional order block. But needless to say, we had this high that we could have wiped out, and we did close back below it. SFP got the order block retests. It was a bread and butter setup, and it had inducement on this order block as well as SFP. So we had so many things telling us that this was going to be a very nice trade, especially with the high volume of a Friday New York Open. So okay. So as we came out of the VWAP, we knew that we were going to be looking for a long once we cleared and closed over this VWAP. And again, this is the 1030 zone. Some people like to use the 1030 kill zone in New York session. So this leads you to keep your eyes wide open, looking for the next pivot and looking for the next reversal. So we did come up. We didn't break any structure coming out of this because we had so many very bearish, strong bearish candles giving us a lot of selling pressure right into the VWAP. So there was no way to long this from here. Maybe if you're on the 15-second or 30-second, but I don't use those time frames on Bitcoin for any kind of structure. So I prefer to use the 2, 3, 5 minute. And here we are in the 5 minute. We cleared the VWAP. This was your next 5 minute high. We came back down. We actually did have an order block here, but we didn't break structure before the order block's creation, or before the retest rather. So we broke this high. So you could say this was a change in the state of delivery, or an engulfing bullish candle above VWAP, and we're looking for VWAP to hold. So it held here. So not only did we get a bullish break of structure in the 5 minute, but we held the VWAP. So that's two very, very nice areas of confluence, or levels of confluence rather. Also, we took all these lows here and closed back above them. So we're also sweeping low. So if you come up here, let's go to the 45-minute. You can see that this was just a 45-minute SFP. We actually didn't close below this on the higher time frame, and the higher time frame is always the one that's going to have a better probability, or just give you better weight. So back on the 5 minute here, we have that bullish break of structure, and then we come back down for the retest. And you know, something simple you can do for retests is just simply pull a Fibonacci, because more times often than not, whether you want to look at it as a Fibonacci, or you could just say, okay, I want to see it at least come back to the EQ of this market structure leg. And this is what? This is a range. So what do we also want to enter in on? If we take a look at our extreme premium, extreme discount section of the range, we are pretty much in the discount, almost right to the extreme discount section of this range. So let's remove that, clean it up. Again, you could have just easily used the golden pocket. Let's say you waited for this candle to close, you saw that wick, you had the break of structure, VWAP was holding, and you got in on the open of that candle and put your stop loss at the low, and you targeted the previous high, because what do we know about market structure? If we SFP this previous low, now this is our strong low, and this previous high is the weak high. So this weak high is now our targeted high in market structure theory. So that would have given us a 4.25R trade. Now, if you would have held on to that trade and you would have came over here and said, okay, well, let's just target the range high, because that would have also been very valid here. If you targeted the range high, it would have been a 5.25 trade. If somehow you would have taken it to the tip top of the high, it would have been a 7.5R trade. Or if you had this daily level on your chart, which I did, gave you a 6.3R trade. So now that's the recaps. Now we can clear the order block and all these other lines off the chart. And let's go back to 4 hours to let's see what's coming up next. So now that we have broken this range, what do? We always adjust the range once it's broken. So we adjust our range here. And you can even take it from this low down here. It's pretty insignificant as far as the difference. So this is our current range from the low to the high. And we also can say, let me actually clean this one up. Let's just use the high to low. Get the fibs out of there, because we're going to use this next. We're going to use this next leg of market structure. Oh, I need my magnet on. We're going to use this next leg of market structure for our local range. So from the local low to this local high. So once we break structure, or even SFP structure, what do we look out for? We're always going to look out for a pullback. Now, in this scenario, The day is not done. So, and we have opened a new green candle above this previous candle. So is this the high? It could be, but it could continue up and then come up into, well, could take this poor high out, and it could come up into the next area or the next POI. But however, if this is the high after our previous break of structure, we want to look for a pullback. So what do we look for after break of structure SFP? We look for a pullback. This gives us a continuation long scenario so we can get in with the trend. And we always want to try to go pro trend, pro market structure, pro order flow. So we're going along with the flow of the market. And we're not trying to fight it. We're not trying to counter trend every little rise up. Now you can, and there are those times where when we do reach these POIs or these order blocks coming up, we can look for a short there. But if we're going against the trend, those shorts need to be scalps. Potential turn into swings. But you need to guard those because it's going against the trend. Now, when we get this pullback, where do we want to look for a potential trade next? So let's take our high, low, as well as the Fibonacci so we can map out our next areas. So I do see a massive 3-hour order block here. It's a little bit bigger than I like to use because it's just such a big area. But that's okay because I'm not going to take a trade right as soon as it comes back into the area. I take a trade when it comes to the point of interest and I see some kind of sign of strength coming out of it because that's going to be your most conservative entry. I don't like to take super aggressive entries unless I'm using one of my other strategies, which is long story, and that's going to be covered at a later date. So let's go ahead and mark out this 2-hour order block here. We do have a daily level that is right in that 2-hour order block. So that's going to give us a little bit of love there. So where I would look out most is that daily. And as VWAP is following up here, we can see that VWAP might line up with that daily very, very nicely. So as we come down into this, this is what I'm going to look for. I will look for something like this and then a break. You have 2 breaks. Maybe it comes back another time. So you have 1 chance, 2 chance to get in. Depends on how market structure presents itself coming into this. So if it gives us a market structure break on a lower time frame, say the 15 or the 5 minute or the 3 minute, we will see that in here or coming out of this section. Now below that, we do have, and this is my preferred scenario. However, if we maintain a very bullish sentiment and bullish structure, it's probably going to bounce from here, from this daily or from the 0.5 VWAP area. So this is why this is a very important zone. However, I always like it to come back to a slightly deeper retracement to get an even better position. So this order block here has 2 dailies in it. So that's why I really would prefer that order block. Now let's use something else to try to confirm these levels or to try to add even more confluence. We're going to use our volume profile. Well, right away, we see the point of control is right in the upper order block that we have mapped out here. So that's very, very nice. We do have several high volume nodes in this area. We do have the value area low in this lower order block, which we also have a naked point of control and the weekly point of control in this order block. So all of these would be very nice areas to get along from. Of course, we have to look for confirmations once we get to those areas. So let's take a look at the leg, the most recent leg up from the bottom. Again, the point of control is riding right with that VWAP, which is this gray line. And we see that we have a lack of volume down here. So the majority of the volume is still up high in this range. So it is very likely that we would not come down for that deeper retracement. It's more likely that we will actually bounce from this area here. We do, however, have a second high volume node, not quite as big as this one with the point of control, of course, but we don't want to be blind to this one, as well as the NPOC and the weekly POC here. So my bias would be this top one or this one down here. This one might offer a scalp, so we'll keep that on there. And of course, it depends on what unfolds between now and when it actually gets to here. So let's take one last volume pull, and this volume pull is going to be from yesterday's low to current price. Again, we see the point of control in the same exact order block location, and we see the value area low in this lower one here that we pointed out. So all of these areas are very, very great areas based on location of the range, Fibonacci, daily levels, as well as volume. So that's what we want to see. So all these levels are worth keeping on our chart. Now this lower order block down here was a much lower time frame order block, but I do have it on here. However, we have a poor low right beneath that, so I don't think this one is going to be worth much. This is probably one I would not pay attention to as much. So we have this one here, and this one here. These three order blocks are my main long areas of interest for the weekend, or even going into Monday, or whenever we decide to come back down. Now, for the upside, what am I looking for as far as shorts? We have a poor high right here, which we already know there's going to be liquidity all in this range. So let's go ahead and mark that out. I like to mark everything out so it's very clear. And of course, we've already taken this little bit of liquidity from this high, and this high also took liquidity here. So really, you don't really have much left right here. So will that cause much of a cascade back down? Just stop those people out? How many of these people that were short here actually trailed their stop lower? Probably the majority of them. So I think a lot of the liquidity is probably already taken. However, it's nice to note that, hey, we do have a high right here that's right below these two order blocks. So we can also say that this first order block has inducement on it. As well as we have a daily riding this order block and a weekly riding this order block. So that weekly is going to be a very strong level. So I'm definitely looking for this order block before I'm looking for this order block, or rather over this order block. I think this one has a little bit more weight because we have a weekly, a daily in here. And what do we see as far as the range? What do I always preach as far as ranges? When we get into ranges, we're looking for shorts. We want to see a short opportunity in the extreme premium section of the range. So this is why I like that order block best. And if we get above this one, of course, the next levels to look for are these two highs. We have almost triple highs right here. So you know that there's a lot of liquidity sitting there for taking. However, we have a little bit to get there, so I won't go above that, but we do have plenty of other order blocks with volume backing those order blocks. So that is it for Bitcoin. We had a very nice day today on Bitcoin, as well as S&P 500, doing a few little scalps. I will go over S&P 500 next to show you what I was looking at there and what I have coming up for the weekend, or rather Sunday night into Monday morning for futures. I hope you all have a good weekend. Take some time off from the charts. Spend some time with family and friends. Or if you have a little extra time, do some back testing. Backtesting will help your confidence out for the future. Practice trades, practice charting, practice your risk management. All right, I'll talk to y'all later.